Joining us now to talk through her stock picks and where she's seeing some opportunity in these markets, which are under pressure again this morning. Let's bring in Stephanie Link, Chief Investment Strategist and Portfolio Manager at Hightower and a CNBC contributor. Steph, it's great to see you bright and early, kicking things off here. I'm just going to go right to the heart of the matter, and you can take the Broadcom side of this, NVIDIA, whatever it may be. The chips are under a lot of pressure with all these questions about these export controls. So what do you think investors should do?
You know, I think if you have a long-term time horizon, NVIDIA right now is trading at 20 times forward estimates, and that's on new numbers that have come down. Because numbers are going to come down, obviously, after the write-down, probably by like 8%, 8 to 9%. But now you're trading at 20 times. Trough has been 23 to 25 times historically. We're not out of the woods, Kelly, at all. But this is a high-quality company, number one in the industry. I don't own it, but this is like the first time I'm starting to really look at it. I own Broadcom, and that's going to get hit too. I've been adding to Broadcom because I do like the diversification of Broadcom versus NVIDIA, which is pure play AI. But that being said, there's a price for everything. And this stock is down quite a bit from its high. And I just think that when the dust settles, people will go back to number one or number two in any given industry.
Yeah, no, and I don't know if you caught it, but Steve Eisman yesterday told us NVIDIA is one of his core holdings for the, he's kind of bearish in the near term, but says that's a core holding of his for the long run. So maybe an opportunity there. What about the rest of the kind of China trade? I don't know if it's the companies like Nike and Starbucks we used to talk about 5-10 years ago. What do you do here? Like Joe said, if there's going to be months of uncertainty around, how this all evolves.
Yeah, and so this is where I kind of step back, and what I have been doing, Kelly, is looking at number one in any given industry that is down a lot, because right now there is selling across the board. And so if you can get the number one player in any given industry on sale, down 15, 20% or whatever the number is, that's your opportunity to upgrade your portfolio. And so over the last, say, 4 weeks or so, that's actually what I have been doing. You don't need to own the number 3 or number 4 player, right? Because they're number 3 or number 4 for a reason. So if you can find companies out there, which I've been able to, that's what you want to do. Sentiment is still really negative. Numbers have been coming down. Target prices are coming down for stock sectors, the overall market at large. But that is old news. Like, we kind of know that already. So what we do is we kind of say, all right, who has a really good next 12, 15, 18 months? Who are the secular winners in any given industry? And so that's what I'm trying to do. I'm just trying to upgrade the quality.
I know I saw you liked Bank of America's results and think that, that should sort of close the gap there. I'm just curious, for instance, in the airlines, right? Do you go to the number 1 or 2 company there, or is that an industry that you kind of stay wary of, or a Boeing, right, which arguably number 1 or 2 in a duopoly, but again, is that a name that? So can you look even to kind of airlines and Boeing and apply that, or no?
Well, I think airlines are harder. In my history in the market, I feel like those are more trading vehicles than investments. I mean, they have challenges even in the good times to actually report consistent results. So to me, I'd rather own, and I do own Boeing. I do like it. I do think the news yesterday was blown out of proportion. China needs Boeing's planes. China's planes are on average 10 years old. Do you know that globally planes are 15 years old? We need new planes. And oh, by the way, Boeing, I think, is doing a very good job in terms of producing around the world. They're increasing their production, their deliveries, their free cash flow will eventually improve. But this is not a demand problem for Boeing anyway. It was a supply problem. It was an execution problem. And now you have a CEO in place that has a proven track record who's improving the culture at the company. So I think that with Boeing in the duopoly, with 5,600 planes in their backlog, I think that they're in a good position if they can execute. So, yeah, no, and you mentioned Bank of America. So I like Bank of America because it's underperformed the sector by 1,000 basis points year to date. And I thought their quarter was quite good in terms of fees, efficiency, even net interest income. And oh, by the way, they actually talked about guidance for net interest income, reiterating it. I was pretty surprised that they even gave guidance. So I think the banks as a whole kind of calmed us all down a little bit because they did give guidance, even if it was just in line. It was better than what people feared. I've been adding to, and my new position is Meta, because I haven't owned Meta in a couple of years, and the stock is down 28% for 20% revenue grower and 40% operating margins and a 3.3 billion user base. And then a new position for me is Intuitive Surgical. This stock is also down 20%. Number one in the industry. They have years in terms of an advantage in the industry. And do you know there were 200 million procedures that were performed last year, and they performed 2.4 million? They have a 30% market share. But just think of that tailwind that they have in terms of increasing their procedure levels. So I think there's a lot of things that you could do here. You just got to be patient and have a longer term time horizon.